Hi friends, welcome to my YouTube channel SS Analysis. First of all, I would like to tell you that if you are watching this video first time, subscribe my YouTube channel to see my upcoming videos on analysis of different commodities and equity indices. And second important thing is to watch this video till its end to understand this thoroughly to take your decision. Your one like will motivate me to be regular in working more hard for you. Today I am going to analyze the currently prevailing global slowdown conditions while analyzing the current tremors in precious metals and S&P 500 futures. I find a plethora of questions from the viewers of my channel, like is growing volatility in precious metal a primary indicator of upcoming market crash in global equity markets? Not only the investors and traders look worried about the growing global slowdown concerns, but the International Monetary Fund is also look ready to combat with any such recessionary situation in near future. The International Monetary Fund laid out a game plan for battering a potential global slowdown. The plan would see central banks implement negative interest rates given their currently low levels as fretting over still unresolved trade tensions, particularly between the US and China, continues. The IMF took active action to enable monetary policy makers to combat an inevitable crisis. The organization explained that many central banks reduced policy interest rates to zero during the global financial crisis to boost growth and noted that 10 years later interest rates remain low in most countries. While the global countries has been recovering, future downturns are inevitable. The IMF warned crises have historically required interest rates cut in order of these to 6 percentage points, but only 3 countries like Turkey, Mexico and Ireland have that kind of room to maneuver today. The IMF staff study intends to show how central banks can set up a system that would make deeply negative interest rates a feasible option, and comes even as Federal Reserve is struggling to convince markets that they could move forward from the current range of 2.25% to 2.5% with more rate increase this year. But markets are skeptical, placing a probability of only 4% on one increase in December compared to odds of nearly 12% for a cut by the end of the year, according to Fed Funds futures. Let us start the day to analyze the movements of global equity indices in different time frames to find the probabilities of upcoming market crash in 2019. First, let us have a look at the monthly chart of S&P 500 futures, which I constructed to analyze the movements before the last 2 market crash, how the S&P 500 futures moved before the market crash of the year 2000, when we witnessed the S&P 500 futures were not able to go above the level of 1528 on 1st August 2000, from where they witnessed a steep downward crash up to the levels of 806 on September 2nd, 2002, till they remained in a recessionary phase, I will call it, and once again we witnessed a beginning of an uptrend in S&P 500 futures. From June 2003, we witnessed a uptrend in S&P 500 futures which continued till May 2007, where we found the S&P 500 futures touched the highs of 1550, and here you can see that before a crash the S&P 500 futures attempted many times to cross this first immediate resistance. Here, what they have witnessed during the year 2000 before going downward, here we witnessed the S&P 500 futures once again attempted to cross this level, but they could not, and finally we witnessed market crash in November 2007. The S&P 500 futures moved downward up to the level of 1315, and once again we witnessed S&P 500 futures to attempt to go upward up to the level level of 1430, and from where the S&P 500 futures crashed all of a sudden, came back up to the level of 724 in February 2009, and after 2 months of consolidation, we can see here the beginning of an uptrend from April 2009 when the S&P 500 futures started to move upward up to the levels of 2120, where they find some resistance, but they consolidated between the level of 1906 to 2100. After some months of consolidation, the S&P 500 futures started an upward journey from December 2016. Here we can see that the S&P 500 futures remain in upward trend above this uptrend line, and here we witnessed a breakout up to the level of 2806. First breakout was there in January 2018, but here you can see that this uptrend line, which provided a stiff resistance during the market crash of 2008, the S&P 500 futures once again witnessed stiff resistance at this upward trend line, first time in February 2018 at the level of 2823, from where they make a downward move up to 2681 in April 2018, and once again we witnessed an upward move till the level of 2977, where the S&P 500 futures once again have witnessed a stiff resistance at second uptrend line on October 1st, 2018, and since then we can see hard selling pressure is there in S&P 500 futures, which is keeping the S&P 500 futures in heavy pressure, and we have seen the S&P 500 futures to move downward up to the levels of 2515, where we once again witnessed an upward move, and the S&P 500 futures are currently witnessing a stiff resistance at 2720. Let me zoom this portion of a monthly chart for you to have a clear look how the S&P 500 futures are facing stiff resistance at this level at 2925, and now currently the S&P 500 futures, where we can see the formation of a shooting star in a monthly chart, which indicates a sharp downward move very shortly in the S&P 500 futures, as here you can see the 20 days moving average has come above the 20 days exponential moving average, which indicates the continuity of a downward move in S&P 500 futures very shortly. So I find once the S&P 500 futures move downward, we will see them to find their first support at the level of 2393, but once we find the S&P 500 futures, if they are not able to sustain at these levels, I find the continuity of a downtrend in S&P 500 futures, where they may enter this crash zone. Friends, I find if the S&P 500 futures move downward and cross the levels of 2100, I find we will see the beginning of a market crash, where I find the S&P 500 futures may finally take their last support at the 200 days moving average at the level of 1592. Let us see the movements of S&P 500 futures in a daily chart. This is a trend based Fib extinction chart of S&P 500 futures. Here you can see that after touching the highs of 2944 in the month of October 2018, S&P 500 futures witnessed bouts of selling. Since then, continued to move up to the levels of 4321 on December 25th, 2018. Since then, we have seen a sharp recovery in S&P 500 futures, but once again, you can see that the S&P 500 futures are maintaining above this uptrend line in a daily chart. But here you can see once again we have started to face stiff resistance at 200 days moving average, where in a daily chart we have seen this formation in S&P 500 futures, which indicate once again the continuation of a downward trend in the S&P 500 futures. Now let us have a look at the movement of FTSE 100 indices in a daily chart. Here you can see that after witnessing highs of 7773, the FTSE 100 started to move downward, and after breaking this level of 7317, we witnessed a continued downward trend till December 27, 2018. Since then, we can see an upward trend in FTSE 100, and here you can see that since the formation of this bearish signal in a daily chart, which have been formed much below the 200 days moving average, indicates a lot of selling pressure in FTSE 100, and we may find the continuation of a downward trend once again in FTSE 100, and I find once we see the FTSE 100 to break the levels of 6660, we will find a sharp selling in FTSE. So friends, I find that still the prevalence of bearish trend in FTSE 100. Now let us have a look at the German index DAX in a daily chart. In the same chart pattern, here you can see that after touching the highs of 13197 on May 22nd, 2018, here we can see that the DAX is also looking under pressure since then. No doubt that the downward trend is a little bit slow than other world indices, but here we can see since December 3rd, 2018, we have seen a sharp downward move in DAX, and we have seen the DAX to touch the lowest levels on December 27th, 2018, where DAX touched the lows of 10,257, and since then, no doubt, we have seen a good recovery in DAX 30 up to the level of 11376 on February 6, 2019. But once again, the DAX 30 has witnessed a sharp selling, and now in the daily chart here you can see that gap down moves are here, and the DAX 30 has broken this uptrend line in the daily chart, and here the formation of a shooting star is evident enough for continuation of a downward trend in DAX 30 in the days to come. We will find once the DAX 30 breaks the levels of 10658, we will see a sharp downward move in DAX 30. Now let us move towards the movements of Indian indices in a daily chart. Here you can see that after touching the highs of 11745 on September 3rd, 2018, Nifty 50 futures have seen a sharp downward move which continued up to the level of 10,018 on October 26, 2018. Nifty 50 futures tried to move upward but remain under pressure at the level of 10916, where the Nifty 50 futures are constantly facing stiff resistance. Here you can see after trying again and again, Nifty 50 futures have seen sharp selling from the levels of 10950. We have seen heavy selling pressure on every upward move up to the level of 10955. But now, after moving in this range bound manner since November 2018, we have seen the Nifty futures have broken this immediate resistance on February 6, 2019. But here you can see that they were not able to break this uptrend line, and here this formation of exhausted hammers followed by a gap down in a daily chart indicates the continuation of a downward trend in Nifty 50 futures, as all the moving averages are trying to move downward in a daily chart, and I find once the Nifty 50 futures are not able to sustain above the level of 10717, we will see the Nifty 50 futures to move back up to the level of 10256. But once we find the Nifty 50 futures to move more downward and they break the levels of 10,000 on the lower side, we will find the beginning of a market crash in Nifty 50 futures. Now let us see the movements of gold futures in the daily chart. Here you can see that after touching the highs of $1398 in April 2018, gold futures started to move downward and touched the lows of 1186 on August 16, 2018 after a consolidation in a range bound manner up to the level of 1240, and on the lower side 1196. Gold futures started an upward move from November 2018. Here we can see a sharp upward move was there, and I find the reason was most of the central banks of the world were busy in buying gold to meet the upcoming recessionary situation in future. So here you can see the sharp upward move in gold futures in a daily chart, which resulted the gold futures to attain the levels of $1302, and no doubt after facing a stiff resistance at the level of $1302, gold futures moved downward. Even here you can see a gap down on January 21st, 2019. Once again we witnessed an upward move in gold futures, but again the gold futures are facing stiff resistance at the level of $1285 amid the hopes of resolving escalating tariff trade war between the US and China. Gold futures remain in upward move back up to the levels of $1354. If we find any downward trend in global equity markets which will provide an upward move to gold futures, therefore I find that this type of volatility indicates growing concern of central banks for an upcoming slowdown at the global level during the days ahead. No doubt that soon we may witness a global slowdown in equity markets if the S&P 500 futures move downward below the levels of 2189. I find that the S&P 500 futures entry in this crash zone before June 2019 will indicate the beginning of the next crash of the year 2019. So friends, thanks for watching this video. If you like this video, don't forget to share this video with your more and more friends. Thank you.